Welcome back. You're listening to Houston Real Estate Radio. I'm your host, Shanna Register, and every week we bring you news and information you can use on your next real estate transaction. We've got a lot of investors looking forward to jumping into the market when prices go down because of all the oil price issues that we've had in our economy. But what I'm telling them is to jump in now because we don't know that they're going to really go down that much. We have so much demand in Houston. Across the state, there's a lot of demand. People still moving to the area because there are a lot of industries that are not suffering because of oil prices. Some of the industries are actually doing well because oil prices are low. And so we still have a lot of people moving to the area. New construction is still getting more and more expensive to build, not just because of lot prices, but because of building materials and other issues that they're having. They're getting more and more highly regulated as well. So we expect costs to continue to go up on new construction. So we're talking this segment about foreclosures because a lot of investors want to buy foreclosures. And the main message that I want to put out is just don't go after a foreclosure. Go after looking for the best deal you can get because sometimes that best deal is not a foreclosure. Sometimes it is a foreclosure. Sometimes it's a short sale if you've got a lot of time to wait to close. Sometimes it's just someone who needs to sell and they're willing to negotiate low. So, just talk to your realtor about purchasing a good investment property and knowing what you're buying and knowing what you're going to be able to sell it for and the potential for resale down the line versus just going after a foreclosure property. So that's what we've been talking about. Talked with Jay Richardson from REA because he's been selling foreclosures for so many years, like 20 years. And we talked a little bit about the differences from back then to now because things have changed a lot with foreclosure properties. And this segment, I've got Chris Childers here in the studio, and he's going to be talking about foreclosures because he works with a lot of buyers as well, a lot of investors who purchase foreclosures, as well as other properties. There are a lot of options out there for investors. So I'm going to be talking to him this segment. He's a realtor over at Register Real Estate Advisors. So Chris, before we get started, want to give the call-in number, 844-788-9444. If you've got a real estate question, give us a call. We're actually going to be answering real estate questions on air like we always do it. We had one last week. So 844-788-9444. You can call in anytime, leave your real estate question, and then we'll answer it here on the air. All right, so Chris, let's get started. I know you've sold a lot of foreclosures.
Yeah.
So what do you think about investors who only want to purchase foreclosures? What's your take on that?
Well, if they only want to purchase foreclosures, it's kind of limiting themselves. Kind of chasing an idea that may or may not be, the best path for that. So, what I would recommend to them is just kind of like you said, just broaden that net there.
Look for the best deal.
Yeah, absolutely. Because a lot of times there's better deals out there than just the foreclosure.
Yeah. So do you feel like it's more difficult to sell someone a foreclosure or easier to sell someone a foreclosure than a regular property?
Well, it's more difficult because of course you've got more red tape to cut through. When you're dealing with a big company, you've got to go through different layers of individuals and to get your answers and make things move. So it's definitely more time consuming and a lot more waiting.
One of the things, though, that I like about it is there's no emotion. There's nobody emotional about it. There's nobody cutting their memories from the house when they sell it. And so there's no emotion. And, you send over the offer or you put in the bid, however the foreclosure's working, and you get an answer back. And the answer, it is what it is.
Sure.
And no one's, very rarely is the letter going to help you get what you want. So, I like that it's kind of an emotionalist transaction, which is usually the case when you're working with an investor. They're just trying to get the best deal, which is different than working with a home buyer who's trying to find the perfect fit to have their memories going forward and a home seller who's having to cut ties from the property. What about the process of buying a foreclosure? They have put limits on foreclosures where some of these foreclosure companies will say for the first 10 days it's open only to homeowners, and then after the 10 days, investors can bid on that. Tell me a little bit about that.
Well, it depends on the source of the foreclosure. If it's a government foreclosure, or if it's just an individual servicer or something like that. But they'll put limits on it because naturally, they want to stimulate the actual owner-occupied, development there. And for the first 10 days or so, like you said, then they'll have the limits there where it has to be a home buyer.
And then if they can't get what they want on those bids, then they open it up to investors.
Yeah, and it's kind of like the calm before the storm. Whenever you have that open bid in there, you get your first time home buyers in there wanting to save some money and get a good deal, and you'll get a couple there. But you've always got those guys just waiting in the wings to pounce when the opportunity presents itself.
All right, and when you're working with clients and they are interested in a foreclosure property, you have to explain to them that you're going to have to pay for utilities to be turned on, and then after inspections you're going to have to turn them back off, and then when you buy the house you're going to have to turn them back on. So you're going to incur more cost as a buyer when you purchase a foreclosure, usually just in those upfront costs. So how do you? It kind of has to be a good deal to make it worth doing that. Right?
Oh, absolutely. Yeah, it's a whole different level of commitment. It's a whole different experience when you're purchasing a bank-owned property. Because they're not going to spend the extra money. Again, they're not emotionally attached. They want to sell it, but they really could care less because somebody's going to come along that's going to play it their way. So there's a lot more expense and time invested and waiting around for the gas company to show up so it can be turned on. And so it's definitely a lot more involved to go through the process itself.
And do you feel like consumers who are buying foreclosure properties, do they understand all these things, or you have to educate each one of them?
If you're dealing with a seasoned investor, somebody who's done it before, I think they have a better idea. Even in that case, a lot of times I find some pushback from that because they expect that the seller needs to be malleable and give a little bit on that stuff. But so if they're seasoned and experienced, then they understand it. But either way, full disclosure is the best practice, depending on regardless of who you're working with. So.
And usually on a foreclosure, they're not going to make repairs. They've already made the repairs, and that's also part of what I found why they won't go down in price either. Right. They're not as competitive as people think they should be to be a foreclosure, because when the bank foreclosed on it, they then brought in a roofer to fix the roof problems and someone to do this and that, and they actually brought the property up to pretty good living condition to where it can qualify for a loan. So then people are wanting to purchase it and lowball the bank. Well, the bank's already got cost in it, plus so it is at market value. People say, well, it's a foreclosure. Well, no, it's at market value because they came in and did all this work to bring it up. And I'm talking about the ones where you go in and the lights are on and it is, presentable.
Of course. It's a whole different world than it was 10, 12 years ago. I mean, there was so much, especially after the market shifted back in summer of 2007 and a couple of years after that, there was so much foreclosure and distressed property inventory out there that the banks just lost so much money selling them below market value. So, 10, 15 years ago, foreclosure was probably a better value if you wanted to invest a little time and energy and money into it. But now the banks have figured it out, and they can recoup a lot of their costs and a lot of their losses by investing a little bit up front. So nowadays they go in, they spend the money, and they get it where it needs to be.
I know, sometimes when I see foreclosures, they sell for more than they were even listed for because of competing bids.
Absolutely, and that's the idea, to create that feeding frenzy. They'll go out there and you advertise it as a distressed sale, must sell foreclosure, and that just brings people out in droves.
Draws people, doesn't
Absolutely.
it?
Yeah, it's kind of
love it.
Yeah, absolutely.
So beware, they're trying to do that. They want you to do that. So, all right. So let's talk about the seller's disclosure. You don't get a seller's disclosure when you buy a foreclosure.
Correct.
So I think the main thing that I try to tell my buyers who are buying foreclosures, because sometimes there are sometimes good deals, and it is sometimes the best property for them to buy. And when that happens, the main thing that I want to get across from them is you're not getting a seller's disclosure. You don't know what's happened in this property before. Research it as much as you can.
Yes.
Google it and all that. But when you start tearing down or taking out appliances, tearing down walls, whatever you find, you have to disclose.
Yeah.
When it's yours, and you have to now disclose it when you sell it.
Right.
So if you pull out the even if you had inspections done, once you pull out that dishwasher to replace it, and you find the wall behind it is all wet and problems, now you got to go in and fix all. You have to now disclose all those things.
Yeah. Yeah. Absolutely. So. Yeah. You've got to understand that it's now your baby, and you're responsible for making sure.
Yeah. All right. Well, very good information. Anything else you want to tell buyers out there who might be looking for foreclosures?
Just contact us and make sure that whenever you do go out and start looking for that next property, hire a professional and just use the information they've worked hard to learn for you.
So how can they reach you if they want to get you to help them buy a foreclosure?
I'm at chris@rrea.com, or I'm always on my cell phone, which is 713-408-8007.
All right. I know you're in the the office a lot too over at Register Real Estate Advisors. If you guys have a question, you can call 844-788-9444 and we'll answer your questions here on the air. And if you missed any of today's show and want to watch it online in HD videos, you can find it at HoustonRealEstateRadio.com.
People often find themselves in need of storage and moving, but don't want the hassle and stress. Sound familiar? Well, at Zippy Shell, we make storage and moving easy. Zippy Shell will deliver a storage container to your home or business. You load it at your leisure, and we'll take it to one of our safe, convenient storage facilities. Or ship it to your final destination. We treat your stuff like it's our stuff, because we understand you're not just giving us your belongings, you're giving us your trust. Zippy Shell. Storage and moving that makes life simple.